The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 23rd wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Oh, I love empowering human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with some empowering beliefs, at least my beliefs about beliefs, and that's this. Beliefs, they have the power to create and the power to destroy. You and I, only us, we have the awesome ability to take any experience of our lives and create a meaning that disempowers us, or one that can literally save our lives and empowers us to places we never even dreamed of. Think about it like this. There's only one thing that you can control in life, the meaning that you give something. What an incredible power. That's the beauty of the markets we trade. We have bulls, we've got bears, one that sees an event as a selling opportunity and one as a buying opportunity. Your beliefs, the meaning that you give to events, to statements, to criticisms, to anything, your beliefs, you are the one in control of that meaning. Really pretty cool when you embrace that and you take the power of that, folks, because what we can or cannot do, what we consider possible or impossible, it's rarely a function of our true capability. It's more likely a function of our beliefs about who we are. And that matters. Why? Because all personal breakthroughs begin with a change in beliefs. So how do we change? Good question. I've found the most effective way to change is to get our brain to associate, massive pain, to the old disempowering belief. All you've got to do is go through, take a look at some of your disempowering beliefs, folks, and write down on a pad of paper all the things that it has stopped you from getting in life. That's how you associate massive pain to that old disempowering belief. Look, we must believe at the deepest level that our disempowering belief has cost us in our past. And if we continue, it will cost us in the present. And ultimately, will only bring us pain in the future. That's a lot of pain. Sometimes, folks, knowing what we don't want is just as important as knowing what we do want. I think knowing both is key, because once we rid ourselves of those disempowering beliefs, then we need to associate tremendous pleasure to the idea of adopting a new empowering belief, a new and better you, a new and better me. And lastly, we must know, and this much I know is true, we must know that in any moment, a decision that we make can change the course of our life forever. The very next person we stand behind in line or sit next to on an airplane, the very next phone call we make or receive, the very next movie we see or book we read or page we turn, any of these could be the one single thing that causes the floodgates to open. And all the things we've been waiting for and more will fall into place. Nothing could be more true than a phone call that I had yesterday. My best friend, he was on a business trip. He was in Vietnam. He's got stories that nobody should ever have to listen to, hear about, or have experienced in life. But he did. Now, what's interesting is that he was on his way back from these meetings. He was in Atlanta. He noticed a cap, or he was wearing a cap, and the guy behind him, recognized that he was in the military at one point in time. This kid was sitting in. He was also in the military. He was on his way back from Afghanistan. He was in his regular dressed clothes, and he was on his way back to surprise his wife. Now, this kid, they were both flying to Jacksonville. The kid, younger kid, he's in his 30s. He lived maybe an hour and a half away from Jacksonville. So John went to his seat, which was back in about the 30th row or what have you. This young lad went up to first class. And, John, you know what it's like if you fly these days, trying to take your luggage, put it up overhead, and then just simply, and then he had to get two guys out of their seats, and he had to go and get the window seat there. He's sitting there, he's, listening to some music, what have you. This young lad walks all the way back to him, turns to him and says, "Take my ticket, you're going up front. I'm sitting in your seat." And John tried to fight it. Of course, all the people around him didn't realize what was necessarily going on, and they're saying, "Take it, take it, take it." And he's like, no, I want you to go sit up front. Well, that was somebody that he just simply was standing in front of in line. But the story goes even deeper than that. He went to an internet function that was a pretty high-end internet function out in Denver. So it was either Utah or I think it was in Denver, and it was over the weekend. Real high level, most people were paying about $2,500 to get into this event. And he's sitting at the bar. He says hello to just to the guy that was next to him. They just started chatting or what have you. And then, just departed, went their own ways. And at this event, they were giving away an award to the guy who was the best SEO, during I don't know what time period or what have you. But, one of the key guys when it came to search engine optimization. So they call him up, they introduce him, and all of a sudden John watched this guy walking up. It was a guy they were sitting next to at the bar. So the guy gives his speech, takes his accolades or what have you. John walks up to him, and the guy says, "Hey, John, how you doing?" And they just started chatting. The next thing you know, John says, "Well, you want to go out for lunch?" The guy says, "Sure." Now, the two of them may actually become, because he sold his business, I don't know, 12, 15 million, whatever it was. He sold it for a bunch. He's not doing a whole lot. Asked John a little bit more about what he was doing, and he said to John, he turned to John, he said, "Are you looking for a partner?" Pretty cool, folks. So I know that this is the way that it works out there, that at any moment, any decision that we make can and will change the course of our life forever out there. So always be paying attention. There are signs, there are signals, always out there in the marketplace. I know you're not listening to hear all of my babbling and stories out there. What's actually cool, I ought to just have John on the air, because those aren't the only two stories just in the one trip that was out there. So anyway, let's go check out these markets here right now. The Dow is off 41 points, S&P down 8. Composites down 26. Russell 2000 is off 6 points. A very key trading day in the marketplace, and key because yesterday was a key reversal day inside the NASDAQ composite and inside the NDX 100. So if ever there was an opportunity for the bears to exert their pressure and take control of the market, it is today. And how today ends will be very important signal inside the marketplace. We just simply have to let things play out. But I see we've got a caller on the line. We've got Kurt in Portland, Oregon. Kurt, thanks for calling. Thanks for holding. How are you this morning?
Oh, I'm good, Steve. Thanks for taking my call.
My pleasure. You, it looks like you might have a question here about dollar and gold.
That's right.
Tell me what you're doing, what you're looking at, or how I can help you.
Well, this is my question now. I want to start off. I listen most all day long, so I listen to all the shows on TFNN. I've been listening for a few years now. I love the shows, by the way, and this is what I'm trying to get my head wrapped around. Is like in the afternoon in during Tom's show. A lot of time there's a lot of talk about the dollar. There was this relationship about if the dollar goes up, the markets usually go down, and if the dollar goes up, usually that hits commodities. And then vice versa. When the dollar goes down, commodities usually and the markets go up. So in the last week or the last few days, gold's been going up, and I've noticed that of course, the dollar's been coming down. And the dollar seems to be down towards the lower end of its range. It's not at its all-time lows, I understand, but
right.
And with gold at its current price and the dollar not at its lows but close to its lows, I understand the Fed's not going to taper anytime soon, so that kind of buoys gold prices. I think I'm getting a little too long-winded, so I'll make this real quick.
No, it's okay. It's okay.
But with the, I'm sorry. Go ahead.
No, I was going to say, I want you to say, your full thought, because then I can better understand what you're looking at and how I can help you. So please continue.
Oh, okay. So I kind of look at the dollar. There's going to be a day when the Fed's going to have to ease back on the tapering, and I think my perspective is, as what I've seen in the market, that the dollar should eventually start increasing. I'm not saying it's going to go to parity with the euro or anything, but if the dollar starts increasing, I'm thinking, shouldn't that kind of keep gold and commodities in check? They're not going to really appreciate that much, or am I not understanding it correctly?
Well, so it was a. Let me ask you first this question. The relationship between the dollar and commodities, or the dollar or gold, what is it that you are actually trading? Are you trading gold? Are you trading the dollar? What is it that you're trading? And then I can maybe better guide you as to a way to take a look at something.
Well, I'm thinking that with gold at where it's at, and I hear Tom, like he says, it costs a little over $1,100 an ounce just to produce the gold by the gold companies.
Yes.
So like kind of like what he says, there is no way that like he says, he can't see. They're not going to let the gold price drop below that, because the gold companies are going to say, forget it, I'm not going to produce it because it's going to cost me, I'm going to lose money producing it below what my cost price is per ounce.
Well, I don't know. I mean, when you say they're not going to let it happen, if you were a strong company in the gold market and you were flush with cash, it would be the easiest way to put out competitors. I wouldn't actually see any. If I were one of the big miners out there and I wanted to buy assets cheap, I'd be on the other side of that trade. I'd want to push people. I'd want to push people out of business. So but more so the question is: Are you long gold, in gold, short? Are you playing gold? The gold miners. What is it that you're? Because there are correlations, and sometimes those correlations, with regard to the U.S. dollar and commodities, sometimes those correlations they become unhinged out there. I have the gold chart, the daily gold chart on my screen here. The black squiggly line that is on it is the U.S. dollar index. Now I've inverted it. So that means that when you're seeing the black line go higher, that means the U.S. dollar index is going lower. So that way you can follow a similar trend out there. And you can say, I'm just looking back here. I've just taken us back into the 2006 time frame. And you can see that the directional correlation certainly does exist out there. There are time periods where that correlation completely goes away. In fact, here's a time period in January of 2009 up to February 2009. There was no correlation whatsoever. But, Kurt, could you hold on through the break here?
Oh, I sure can. Thank you.
Absolutely. We're going to go back to Kurt in Portland, Oregon. Right now, we've got the Dow down 49, S&P's off 8. We'll be right back, folks.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 74 points right now. S&P is down 11. We're going back out to Portland, Oregon, to Kurt. We're taking a look at the relationship that sometimes exists between U.S. dollar index and gold. Now, Kurt, one of the things that you've really got to keep in mind here when trading the U.S. dollar index and taking a look at it is, number one, it's a basket of currency pairs out there. So the euro, which represents the largest weighting inside there, they believe like 53% or so, is only one of the currency pairs. So it's got this interrelationship between a basket of 6 currency pairs out there: the euro, the yen, the pound, the Swedish franc, the Swiss krona, and that's 5. I'm missing one of them that I can't remember. I don't know which one I left off. But basically, it's a basket of currencies. Now, there are times where things correlate, and there are times when they don't. So it's always best to trade the patterns that you're looking at on the individual stock chart itself. And I'm looking at a period of time, and thanks so much for listening, all day long with us here at TFNN. If we go back to the time frame of February in 2010, you had gold that was down at a price point of about $1044.50. Made a series of higher highs out here, making a high back in June 21st, 2010 out of 1266. It was making higher highs while the U.S. dollar index was getting incredibly stronger out here. I mean, substantially stronger out there. So we can see that correlation, that was for a period of about 4 months, and it seemed to kind of come back into sync. But what I would do is I would trade each one individually. I would just look for the patterns that you're looking for, and then go ahead and trade those. And if you're so I get back to the question that. Right now I see the correlation is in play, but is that what made me go ahead and enter long trades inside gold and the gold miners? It had nothing to do with the U.S. dollar index. So if you're welcome to put those correlations in there. I like to look at correlations, but I don't necessarily trade them certainly entirely. I'd maybe look for them to confirm something that I'm already looking at, as another signal out there. And that's how I would suggest would be the best way to use it. Now, the cool thing here at TFNN is that each of the contributors, use some of these different correlations or tools, or we look at something differently. Just because I'm looking at something one way doesn't mean that somebody else is going to look at it the same way. And that's kind of the nice freedom of thought that we have here, the ability to share different trading ideas so that each listener can say, hey, that makes sense, and I'm going to go ahead and use that or try that tool out there. So my suggestion is to really trade the vehicle that you're in. Are you long gold at this stage? Are you looking to get in it? Have you been long for, what's your time frame? Anything along those lines, maybe, and I can help you with a trade.
Well, I was thinking maybe going long gold, but this might sound crazy because I know that a lot of people, it's usually you do pair trades. You go long something and short something else, but I know this is going to sound crazy, but I was thinking going long gold and the dollar at the same time.
Well, I'm not suggesting that you do that. Now, I will say with regard to gold has broken out of a channel line. It's broken out of a trend line. It got everybody's attention, or should have gotten everybody's attention back on the trading session of October the 17th. Nice wide price spread, accelerated volume, breaks a trend line. So gold gave you a signal, to go long then. But you've got to have the right money management in place in order to take any trade out there. With regard to the U.S. dollar index, and you had talked about that earlier, and you thought, hey, maybe that is moving towards a lower bottom out here. I say it's not. I suggest that the euro is going to go much higher, and the U.S. dollar index is going to go much lower. Now, right now, it's a trade at 79.33. It has a 1-to-1 A to B equals CD that will take it into the 78.64 level. So that's that'd be a good move inside the U.S. dollar index. I would also, and we're taking a look at the daily chart for the U.S. dollar index. We can see a descending price channel that it is traveling in, Kurt. And I would say that you wouldn't want to necessarily go long the U.S. dollar index until you saw a pattern complete, some type of bullish reversal signal, something. But right here, you're kind of in the mid-stroke here on the daily chart. And on the weekly chart, if we take a look at that, I don't think that the weekly chart, give me a moment here to find that. Oh, I guess I somehow at some point in time changed. Let me go back here to the weekly chart inside of the U.S. dollar index. This too, the U.S. dollar index could go quite a bit lower. And the reason that I say that is that it's broken out of its rising price channel here, Kurt. So I hope you also got access to Tiger TV or inside the den. But the U.S. dollar index, in my opinion, wants to go lower. So although I'm long gold, I would not be long the U.S. dollar index. All righty?
Hey, thanks for all your help, Steve.
Hey, my pleasure, and thanks so much for calling. Right now, Dow's off 79, S&P's down 12. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's down 69 points right now, and just a follow up was we were speaking with Kurt in Portland, and we were looking at the U.S. dollar index before we went to break. And I mentioned the U.S. dollar index. It's a basket of currency pairs. Now the largest weighting inside it is the euro, and as we take a look at the daily chart for the euro U.S. dollar, the consolidation pattern that I have on my screen, we saw that the euro was consolidating, and one of the coolest patterns that I think it's the easiest with regard to somebody who's just starting to get into technical analysis, because visually you can see sideways moves out there. And the great thing about these consolidation patterns is that 65% of the time they're going to break in the direction that they came from. So it's giving you a clue. Now, it doesn't have to break that way, but 65% of the time they do. The cool thing is, regardless of which way it breaks, when it does break, it's going to make a move equal to or greater than the consolidation. So I had these yellow boxes in here drawn in days ago, weeks ago, probably. Well, I can say weeks ago. I probably was back in last week sometime because the consolidation began in September 19th. So we have the consolidation pattern here. What we can see here is the move inside the euro. Well, it's completed that consolidation pattern. It's completed a small A to B equals CD. However, it was coming into that, and that small A to B equals CD is coming off of the swing point low from The July 9th area, 127.54. That's your A point. Your B point is up here. Looks like on August 20th, around 134.50. C point, that completed on September the 6th. If we take a look at the retracement, that B to C retracement, we're going to see it's about a 50%, maybe not even a 50%. Now we'll give it a 50% retracement out there. We can see a nice, powerful move along that C to D leg. And yesterday's candle, as it was completing, in essence, the D point, doing it with another wide-ranging bar. Markets do not end on wide-ranging bars like that. All that's really going on today is this little sideways pause move out here. And what the euro has done, it's taken out a resistance area. That's the resistance of February 1st. Now, that high, 137.09, is very important because old resistance should become new support. So we'll see any pullbacks, and the euro holds that and tests the 137-ish level out there is very, very important. Important why? Because the larger A to B equals CD takes the euro up to 144, and that is truly where it may be headed to. Now we can see here the euro. Also, if we take a look at that relative strength indicator out here, it's in an overbought condition, so it really should just kind of move sideways or what have you to work that condition off over the next day or so. Out there. That is on a daily chart that we're looking at. If we look at the weekly chart for the euro, we'll see that it too is up over that significant resistance area. That shows it more better. How about that? No, that shows it much better than the daily chart because you got that nice big old bearish engulfing candle. Now, the week has not ended. So come Friday, on the weekly chart, if you see it close above 1.3709, what that is going to tell us is that the euro has broken out above resistance. Now, unfortunately for the euro, it's running into another resistance area, so no break for the queen out here, and this is the one that we really need to be watching because this is long-term resistance. This is the downtrend price channel that the euro has been traveling within since 2008. The blue line, the blue diagonal line that we're taking a look at, the diagonal line to the downside out here. I ought to change these ones to the upside. Well, I'm not going to do that here and screw this chart up here on my screen at the moment. But this blue diagonal line, you can see it's almost near that level. And I can't tell you exactly how much higher that is, but that's going to be some significant reasons. I suspect that what we'll see the euro-U.S. dollar go ahead and somehow move higher, spike higher into that 140 level, 1.395 level, where it also runs into the trend line. And if that area holds, that's at a point in time where you'd start to see some type of pullback inside of the euro-U.S. dollar, and most likely the dollar index start to get stronger. Of course, it always depends on what's going on inside the pound, inside the yen, inside, the Swedish krona, that's like 5%, and the Canadian dollar is probably like 5%. So the other currency pairs are relatively small out there to necessarily be worried about. But that's the longer-term picture for the euro-U.S. dollar. Now, hey, if it breaks above these areas, pretty important because these are long-term declining price channels. We're talking about going back into 2008 till today. So what is that, a nice 5-year price channel that it's traveling within? So that's on the euro-U.S. dollar. We'll certainly keep an eye on that. Now, let's go over. We'll take a look at the silver light sweet crude. Let's do some of that. Silver here breaking. All kinds of trend lines were broken yesterday. I believe if we take a look at the XAU, I'll do that, or the HUI, that broke through its trend lines. Nice bar yesterday inside of silver. It's above the 0.382 retracement of its last move down. That says 23.35 is next up on its target list out here. Just get up to good old sweet 618 area. Light sweet crude, on the other hand, it came back into the consolidation zone. I'll get it out. Don't worry, folks. I'll get it out of my mouth out here. The consolidation zone. Now, this consolidation zone that it broke through never was tested. Came back. It was tested for one day and then broke back down below it. So where is light sweet crude headed to? I would say the first target area is going to be 93.84 to 95.78 before we start to see any kind of bounce. Now, the bounce that we would see, and that's going to be key to watching what happens. the bounce that we would see is likely just really working off an oversold condition. If we take a look at that 14-period relative strength indicator out here, you can see that it's down in the oversold zone. You got a nice 2.618 expansion of a B to C swing point that gets you to 93.82. Of course, 95.78 is your 0.618 area, so that seems to be the range that light sweet crude is headed to. Then what you could see as it works off that oversold condition is a bounce up into the top of the $99 area of that consolidation zone. If it moves up there and starts to begin moving lower, we'll see light sweet crude move all the way down to $86. That's where, if you are not short light sweet crude, that's the area where you would likely want to go ahead and get short, which is around the $99 area. That is on the daily continuous contract that we are looking at. If we take a look at bonds here, bonds getting back above here this morning, that huge consolidation zone. This is a consolidation zone that runs from 2011 to 2013, which is at the 135-ish level. You're 135.12 right now out here inside of the Treasury. So this will be interesting to see if, in fact, bonds get inside of that area. Let's go take a look at the ETFs structures out here. Let's go see what they're doing this morning. Right now, you've got the SPYs trading out at 174.46. Market here has been trading for, an hour and 10 minutes. The pullback has been on 36 million shares. Yesterday, made a high with 126 million shares. So if I do the quick math on that, you've got some pretty decent volume here in the first hour of trading. We'll see if it can keep up. Of course, what we can also note is that yesterday's move higher inside the SPYs, moving into an overbought territory. So a move sideways, to slightly down is just working off a overbought condition so that it can go ahead and make its way up to the top of the price channel at 178 level. That's one way to do it. Another way to do it is going to be some type of retracement from the low to the high. And what I'm referring to there, let's put this on here, I'm referring to the October 9th low, 164.53, the high 175.93 yesterday. And if we take a look at the potential A to B equals CD, let me shorten this up a bit here on light volume. If that's in fact what is really underway, what you'll see is a pullback to good old sweet 618. We'll change the color on here. Sweet old 618 retracement will get you to about the 180 range. 178 is the target, so you could, maybe it's a 0.786 retracement. We'll see what kind of retracement we have, but the market's either going to set up a B to a C of an A to B equals CD up, or it's just simply going to move sideways and to lower and just work off the overbought condition. That's what the SPY ETF is showing us at the moment. Let's go take a look at the Qs here. As we take a look at the Qs, they are trading out at 81.85. Volume so far this morning, pullback of 10 million shares. Yesterday making a high with 43 million shares. So the Qs most certainly have some volume in it. It, too, as you can see, is in the overbought condition. So, so far so good. Volume is a little bit suspect at this time. But more importantly, inside the Qs is really referencing that key reversal session. Now, in the Qs, you wouldn't have seen that. If I go switch back over to the ETF structure, I take that back. The Qs did have a key reversal session. Let me get rid of this 1A to B equals CD. There we go. You can see it here. So the Qs did have a key reversal session yesterday as well. Again, key reversal session, number one, the bar is going to exceed both the high and low of the prior day, which we see that was accomplished. Number two, it needs to come in an extended condition, so you have to have some way of measuring an extended condition. Well, this has really two forms of doing that. It's got the A to B equals CD. This is the one coming off of the lows from June 24th to the high that was put in on August the 6th to a low down here on August 27th. It went ahead and completed that 1-to-1 A to B equals CD. That would qualify as an extended condition, and as well, that relative strength indicator being in that 70-ish level. And then the third element, you have to have a close in the opposite direction of where price was coming from the trend out here. And we had that. So you had a key reversal, and you're having some follow through today out here. And that is the first signal. To me, that is the first signal that we really have to be paying attention to. And when do we have to be paying attention to it? I would say at about 3:59 p.m., because if there's some follow through to the downside, that's going to make me say, maybe more than something to think about. and instead of on the intraday charts looking for the long trades, start to look for the short trade setups out there. So that's inside the Qs. Let's go look at the Russell 2000, the IWM. I'm not there just yet, not until I get taken out of my long trade, and that has not happened. So far, inside the IWM, it is down with 11 million shares. Yesterday made a high with 38 million shares. Right now, it's really just testing the gap, right? So you've got the gap that was created here on October 18th. That also had 39 million shares, the low of which is 109.83. So a close above 109.83 would just simply be a test of the gap. As well, if it really pushed down intraday and did not close inside October the 17th, which is 109.46. That's the high of that bar. That 2 would be support level number 2. So support 2 is the high of October 7th, October 17th. The support 1 is going to be the low of October 18th as you trade gaps out there, open windows. Let's take a look at the diamonds. Let's see what diamonds are doing out here. See what the weak hands. The weak hands have traded back into the channel line. That is the red diagonal line that you see on my screen. You can see it's traded back there with 2 million shares so far today. Yesterday was up with 7.5 million shares. So volume inside the ETFs, inside this morning session, that first hour is pretty good. We'll see if that volume continues throughout the day. Let's take a look at some of the core holdings out here. Apple first, because Apple yesterday, it was a key reversal session as well. It's not having the follow-through today. Any close above 528.45, and the A to B equals CD, which also confirmed yesterday. That would take you up to 572, maybe even 606. And if we take a look at retracements from the high to the low out here inside of Apple, the sweet 618 level is 582.84. So if it can take out the key reversal, that's its headwind that it is dealing with at the moment. If it takes that area out, that's where it'll head to, about 572 to 582. Let's go check in on IBM. Let's go see what it is doing here during this weakness, this weak area. We know IBM on the daily chart moved down to a important support area, which was a high volume bar from the week of August the 12th. Let's go and take a look at this on a daily chart out here. Daily chart, IBM being in the oversold condition, so this is not very bullish sign out here because all that IBM is doing is moving sideways, and it's moving sideways on light volume out there. And that says, could be real trouble in River City because the consolidation that it broke was a 30-point consolidation, and that sets up a target of about 151-ish out here inside of IBM. 151 will take you down towards or below, quite frankly, the August 22nd low in 2011. Other stocks out here that are also moving. Let me see if I've got J.P. Morgan. J.P. Morgan yesterday also had a key reversal session. Out here is that? Yes, we got J.P. Morgan. That's having some follow-through to the downside out here. J.P. Morgan made a high yesterday of 54.68, 24 million shares, and all that it looked like. No. Okay, I thought it was just testing that window out there. I'm going to get rid of, well, we'll see if this area here holds as support. This is the old gap down. It did act as a resistance area. It was tested 3 times. Now we'll see if, in fact, it can act as support. That price level being 52.80, and that was the low of the session on September the 20th. But it gapped down here this morning. Key reversal trading session yesterday, not necessarily looking good now for J.P. Morgan. Volume-wise so far today, 6 million shares in an hour and 20 minutes of trading, going against 24 million shares. Nice big old candle and some pretty good volume on October 16th. But today, 6 million shares in an hour going against 24 million in 6 hours. Not so good. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow down 87 points right now. S&P is off 13. The NASDAQ is down 41 points. So let's kind of recap where we're at here for the day. Number one, yesterday we did get some reversal signals inside the strength in the marketplace. That was inside the NASDAQ Composite and the NDX. We're getting some follow-through, clearly, with price moving lower out there. That, at a minimum, sets out a message of a shift in change in the wind out there, in the wind direction. Now it seems to be coming out of the north, maybe a bit of a cold front that will be moving through the area. Now, a confirmation of that Inside of the ES Mini will be a close today below 1736. You're trading at 1736 right now as we speak. You get a close below 1736, that'll be a secondary signal in the marketplace that we are seeing a shift in the wind, and that sets up a retracement. If we take a look at the S&P 500, let me do that here. And it's really, I've got to make my gauge of the shift and change in the winds really off of the futures contract versus off of the S&P 500. But, you can get access to that. Just log in at 4 o'clock and check out Tom's screen or something like that if you don't have access to it. But that would clearly be one of the next confirmations of a change in the wind direction inside of the market. Now, inside the S&P 500, what I will do is we take a look at the retracement levels if, in fact, we're seeing the winds come out of the north now. I may just be setting up a B to a C of an A to B equals C to up. So the pullback areas, 1716 is the first target, dead cat bounce, 0.382. 1689 is the 0.618 retracement and would be the bottom of the rising price channel. So those would be the two target areas. We also, on the daily chart, we've got confirmation of a change in wind direction. That is on the Euro-Japanese yen currency pair because that completed a nice 1.618 butterfly sell pattern. So far, we've got the bearish reversal signal, a bearish engulfing candle, and so long as the close is below 134.27, that would be your signal. That would be a third and very important signal that we're seeing a change in trend in the marketplace. Now, at this stage here, the bulls still have control of the ball. And what I mean by that, if we take a look at the McClellan oscillator out here, give me a moment here. Let me see what the net declining issues in order for the bears to take control of the market would be 3,293. Only 837 net declining issues out here as we speak. So not too shabby. The New York Stock Exchange is down about 79 points, so about 0.8%. Not the leader on the way down. What is interesting is the Dow is only off 0.5%. So the weak link out here in the marketplace is actually the strong dog as we speak here at the moment. What else should we be looking for? I think it's just as simple as those elements really right there. The S&P futures, and come back, take a look at the Euro-Yen, and because the composite's already given us the signal with that key reversal session and the NDX 100. If they close in the red, well, if those other two elements are in place, they will close in the red, and that's just some additional follow-through, and that is coming from the strong hands in the market. So that's where we're at here. If we take a look at things leading and dropping in the market, Priceline is down $18 right now. CREE, C-R-E-E, that's off 18%. USANA Health, USNA, they're off about 13%. LinkedIn's down 4%, 3.5% down, $8 and change. MasterCard off $8. To the upside, you've got Bard, CR Inc., not an equity I'm familiar with, but they're up 6%, up $7.5. Boeing is up $6.98, and Canadian Pacific Railway, that's up $6 out there. Stay tuned, folks. It is Wonderful Wednesday. That means we got our man Basil Chapman. He's up next. Following Basil, Larry Pesavento, Daryl Martin, David White, and the Tom O'Brien Show. Have a great Wednesday, folks. Look forward to seeing you tomorrow.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.